Good morning, everyone. Welcome to our Friday morning trading room. The end of another work week. Woohoo! Weekends in sight. All right. Yesterday, the market still in a very slow sideways to slightly bearish grind. And it just kind of continued that way through the overnight as well. You can see we're not really making a whole lot of progress one way or the other. Some pretty big ranges, however. And we open with an ever so slight gap to the downside. The market following through a little bit what it started a couple hours earlier. Here was your, oh, I don't know, did that fire right on the open? Yes, it did. Your first in-sync eagle signal here of the morning, telling you to sell on a new trend change type signal. For those of you who like that first eagle signal. So things definitely looking a touch bearish today going into the weekend. Or at least to start. We'll hang with the market here a little bit, kind of let them pick their direction if they are going to choose a direction. Then we'll look for some opportunities. But right now, like I said, the market really more on a bearish tear here on the Falcon. We're producing a late filter entry signal. That tends to be a pretty reliable signal right here. So the late filter entry, once again, occurs when your filter goes out of sync, comes back into sync. The trend line itself never changes color. So you can see we're getting a couple back-to-back late filter entry signals. Excuse me. If we are going to set a trend here this morning, we should have at least a couple opportunities to get in. Oh, good solid push from the sellers. Brought us down here now to the secondary support zone right there. Here you can see your Raptor also producing a number 3 signal. That would have been your first in-sync signal of the day. little bit of a pullback. All right, well, here's a macro pullback signal now on the hawk. That does qualify as one of the high probability signals for the hawk. We're getting a little bit of a reaction here now to this support zone. I think if I were to take that signal, I would probably want to short it rather than, well, you see, this is one of these signals. This is how the signal should be taken. It should be taken something like this, just a short little quick scalp. Okay, there we go. We get filled. It should come down here now, fill our profit objective, and hopefully get us out of the trade. But because we are at a support zone, because we have had this little bit of a tear out of the open, I always feel better, say, shorting like this. So it's still the same signal, but I've really delayed my entry, as you can see. The problem with this, of course, is I'm not gaining any. I've postponed my entry until well after what would have been my high probability profit objective. Now that macro pullback is also turning into a 4-arrow consolidation, and actually you could do the same sort of thing here, and maybe what I'll do is I'll try to run it out a little. So look to enter below there. The advantage of doing this is that you can usually get by with a slightly tighter stop loss order. That's also a bracketable range, by the way. We were talking about bracketing ranges the other day. Here the Falcon producing a very nice late filter entry signal, kind of along the same lines. And so we got a quick little move lower. A little bit of a pushback now from the buyers. And you can just see the sideways nature here of the market. How I mentioned that we could have done a little bracket trade here. So they're backing up. Tag me out. I think my stop may have been a little bit cozy on that, but that's all right. I'll take the early stop out. Fridays can be nasty days too, because going into the weekend, a lot of times the market not really ready to commit one way or the other. Well, they don't seem to be in the mood to head any lower. I wonder if they're going to be a little bit more inclined to head higher. Back into the hard edge now of the trading band. That's where we always anticipate some sort of a reaction. The Hawk's still looking a little bit bullish. The Eagle, the Raptor, both bearish. The Falcon, a little undecided. The trend line changed color, but we never really produced a signal there. Yeah, it's starting to look like my stops may have been a little bit too tight. Here now, a number 3 signal on the Eagle. That's the hard edge bounce. And I wouldn't mind a second push opportunity on this one. Let's see if the market rebounds a little bit. Is that it? Is that all you're going to give me for a second push? Usually I like to see the market actually make a swing. Sometimes all you're going to get for these second push bars is something like this, something with a wick or a tail, depending which way the market's going. And we'll see if we can't run this one out a little bit. Come on, don't stop now. You're so close. Well, the buyers digging in a little bit here around the 67.30, 31 zone. This next move lower, if we get another move lower, is probably the one that I should look to do something with my stops. So I'll set my break even and I'll get my stops ready. and we'll see now whether the sellers can move the market lower still, or if we're going to end up moving in yet another sideways trading range. So the number 3 signal, when I was looking to take it, by the time the signal printed, it had run away on me a little bit. So I got a slightly later entry than what I was hoping, but it should work out. There's still some bearishness in this market, I think. Although the longer it stays going sideways like this, the more balanced it's going to be. It looks like it was bearish for about 5 minutes out of the open, and now we're in this sideways drift. Okay, here we go with yet another number 3 signal. Now we're coming back with yet another number 2 signal. So yeah, we got a market that's kind of constipated here at the moment. Okay, this is pretty much the last chance for the sellers to get the market lower. And this number 3 now qualifies as what we call a double pullback signal. It's when the market moves into the cloud and tries to come out of the cloud twice, producing a signal each time. This would have actually been the number 4 signal for the Raptor had we been able to program it, but it was just a little bit too complex. There were too many variables that we couldn't account for in the programming. All right, here they go. Here are the sellers. Take the trade to break even now. I'll hold on to it there and maybe get ready for something like a parabolic mode. Here we go. Well, getting a little bit of a pushback now. Oh, darn it. I was just about to cancel my order so that it wouldn't tag me on that little bit of a reverse, but that's all right. It was a good trade all the same. And it looks like the market's a little bit more in sync now. Yeah, you can see so far, had I not moved it, I should have held off the parabolic mode just a little bit longer. But so far, it looks like the market is still falling off nicely. This would be one of those discretionary signals if you got stopped out and you were looking for another chance to get back in. That's a signal that you could certainly take advantage of. Well, what do we think? All right, the seller's going to push it again. They caught the buyers off guard this last time when we were going sideways here, and you saw how quickly they broke down to the short side. I don't know if I want to get in too early here. Rather, I would probably postpone my entry a little bit. Yeah, David, you got counter-trenitis just like I have. David says it looks like a good buy might be setting up here. Oops, not now. I don't know what it is about human nature or the way our eyes look at things, but it's so tempting to look counter trend all the time instead of staying with trend. You know, with trend, we've got an opportunity here. This is again just one of those discretionary signals. You could look to short just below here. Again, you probably don't want to crowd it too much in case the market is bouncing around a little. Cover above the resistance line right there. But so long as you have a trend, it's almost always better to stay with the trend as much as you can anyways, as much as you can tolerate. Yeah, David, you know, truer words have never been written, David writes. That's been my biggest problem. I can't seem to resist looking for counter trend setups. I miss lots of great trend setups. I think I mentioned this the other day, but if you're not keeping a trading journal already, really you should. It is the single best thing you can do to improve your trading, and I'm not exaggerating when I say that. And there's nothing involved except just a little bit of effort. Just writing down your trades and writing down the reasons you took the trades. And it will become evident very quickly what is working, and what is not working. And that's perhaps the best way to break out of that counter trend mode, is to come to your own realization that, hey, these counter trend trades are costing me. The appeal of the counter trend, like I said, it's a probability thing. The counter trend trade offers, or tends to offer, lower risk in the sense that, okay, here's a trend change signal on the Falcon now. So the trend line has changed color. This is a buy signal. It offers a little bit of security in the sense that you know you can place your stops right down here and cap your risk. The trade-off for the smaller risk amount is a lower probability of success. Yes, the market may go up and find your high probability profit target, which is relatively modest, but compare that to a with trend signal, just your run-of-the-mill with trend signal. Where are you going to cover this? Well, normally I like to cover two swings back. So here's swing one, there's swing two. It doesn't look as promising, right? You've got a lot more at risk, but what that does is it actually increases your probability of success. This is actually a higher probability trade because it is with trend. And I can tell you about it all day long, but until you come to realize it for yourself by doing it, it's not going to sink in. So that would be my suggestion to you. Journal, excuse me. Oh, sorry about that. Had a sneak up on me. Journal your trades and track your own results. Like I said, I very, very rarely review my trading journal. I fill it in and I throw it in the recycle bin. But just the fact of writing these things down day after day after day, it does make an impression on your mind, and you will start to see how certain things are working for you. The bulls always have their pushbacks in a downtrend, and the bears always have their pullbacks in an uptrend. But it's the overall trend that we want to be with. And you can see from my first trade too, my stops were just a couple of ticks too tight. The whole logistics of trading never really changes. Okay. Okay, so here now on the Raptor, we're getting a number 3 signal. This may prove to be a test of the extreme. It might be advisable actually to take a signal on a breakout lower, because if this does prove to be a test of the extreme, if the market is not going to continue lower, well then we have our clear opportunity to buy. Oh, well, okay, thanks. David says, FYI, Ninja confirmed my finding that we can't download more than 1 day at a time for replay, so I have to purchase an independent provider such as marketreplay.com or marketreplay.net. Well, that is most unfortunate, and I'm sorry about that. I thought that you could download as much as you wanted. I don't use the market replay feature all that much. The thing when you're in sim, when you're learning to use your tools, is to avoid the temptation to let it turn into a video game, because that's not going to do you any good. And I've had people say that to me. They say, I can't trade in sim because I've got no skin in the game. It just becomes like a video game to me. Well, then put some skin in the game. Trade small amounts. If this is too big for you, try trading the ETF version of the NASDAQ. Trade the Qs. Or if you're following the E-mini S&P, you can trade the Spider. That way you can buy one share and literally put on a trade for like $1.50. Not that you probably won't make enough money to cover your commission, but it will certainly keep it real. Personally, I've never had an issue or too much of an issue with that. Now we're getting that pushback again off of the low. Now that is a little bit of a concern. You know, when you start to, here it might look a little better on the Eagle actually. We like to see, you know, a steady move lower, and then we expect a pullback, and then we like to see another steady move lower. But if it starts hesitating like this, you get a little move and a pushback, a little move and a pushback. That does tell you that the buyers are stepping up, that the buyers are getting a little bit stronger. So pay attention to the overall context of the chart, and that should try to help keep you on the right side of the market. Technically, you know, until that trend line gets broken, so until the market trades, it looks like somewhere above 67.25, 26. The downtrend should still be intact. Now we're coming back with a number 2 signal. Not what I wanted to see. The number 2, of course, is the counter trend signal, and we looking at a test of the extreme. So that's characteristic for a counter trend. Here's a great tip from Nick. I don't know if Nick and David are related. They got the same last name or if that's just a coincidence. But Nick says, I use a third-party product, Batch Download Replay. I don't remember where I found it, but one price for a year, and it's an add-on to Ninja. David says, I'd get out here with a small loss. You know, thanks for sharing your thoughts on that, David. A lot of people, you know, you guys don't need to be shy about asking questions or, you know, posting what you might do. While you might think that I know it all, I really don't. I just try to interpret what's going on the chart. I try to interpret the signals, and most of the time I come out on top, but not always. Yeah, here David's asking, what's that reference again? 1 second here. I will do a little. Little cut and paste for everyone, for those of you who are interested. Almost down to the break even. Certainly on this next push lower, I should get to my break even. And you know what? The market is still fighting, so I think maybe I'll take profit on target if I can get it. Okay, we're at the break even now. Come on, just a couple ticks more. You can do it. Come on. Darn it. So close. It just hiccuped there off of the secondary support zone. I was looking for just a little bit more, another tick or two short. That's all I needed, but oh well. Clawed myself back to break even on the day, which is good. Speaking of counter trend trades, the surefire signal that the market is going to change direction is the test of the extreme. So in the downtrend, when we've got the market trying to head lower and then failing, there we go. Then failing to head lower, that is a surefire signal the market's going to try to go the other way. Sometimes this test of the extreme will actually be just a little bit deeper. It may end up breaking the low ever so slightly, but then it will turn on its heels and head the other way. It's the same thing. But like I say, the one that's easier to spot is when the market retests the low, comes up short, changes direction. You know you're going to get at least one move counter trend. If it breaks a significant swing point, you can count on 2 moves in the new direction. Now that second move very often will be a big one, but not always, depending how strong the counter trend is. But like I said, you can count on at least 2 moves in the opposite direction. So this would be move number 1, this would be move number 2. And after that, the market may end up going sideways, or it may resume the original trend. So you can see here at the moment we're producing some counter trend signals. Not a whole lot of follow through just yet. Here's another number 3 signal. And if this one pivots, see how it's pivoting, we're going to come up with another number 2. That one might be worth trying. But like I said, that is counter trend. Your with trend opportunities is probably going to be a better trade. See here now the number 2 signal. It's not going to necessarily print as a number 2. The signal may be too far removed here from the original low, but that's what it is. You should be able to spot these visually as well. Yeah, great point here from Phil. Phil says, notice the head and shoulders at 942 and the market went lower. And that is so true. You know, here's the head and shoulders. This is I think this is what Phil's referring to as the inverse head and shoulders. And you would normally anticipate a move higher from here, but it did not happen that way. The market just kept going lower. So again, context is paramount. You need to always take context into consideration. I had a fellow tell me years ago that if there's a trend, you should set up to trade with trend, and you should stay with trend until you can't stand it any longer, and then you should trade with trend some more. And he was absolutely right. It was funny. It was actually kind of nice making money instead of losing money all the time. And all I had to do was stay with trend. Imagine that. David, it should show up in your chat window, what I cut and paste. I thought I sent it to everybody. It should be in the chat window there somewhere. Joe is asking, does anybody draw lines where the market is at 8:30 and 9 o'clock? Yeah, that's your opening range. So from the market open. So I've got this handy dandy little tool that highlights the opening range for me. And you can get that tool here from Indicator Warehouse. Just a moment, I will show you where you can find it. So if you go to Indicator Warehouse, the web page, and you do a search here, and you look for, oh, there they are, the initial balance lines. And that's that tool right there. Initial balance lines with range extensions. And you can highlight your support and resist, or highlight your opening range, among other things. and that at the Indicator Warehouse website. All right, a little bit of a pullback mode here. Not a real big surprise, but not as aggressive as I thought it might be. Note we're moving higher, but look at the overlap as well. These are Renko style bars. They shouldn't be overlapping that much. These are range bars. Okay, I think we're going to be on hold here for a little bit. As the market attempts a retrace. Okay, now we're back. And I'm just looking here at the Raptor. This will be true on the Falcon as well for you Falcon traders. Looks like we're going to try to get back maybe to this resistance line here, but we're definitely at this resistance zone at 67.32. Okay, a possible cloud crossover here forming. It's obviously not crossed just yet. The cloud's actually a little bit of a mess. But it is trying. So we're starting to get this market in a little bit of a tight spot. We know where to buy above. All right, so this qualifies as your early cloud crossover signal right here. I'll give them a second here. Well, they're not ready just yet. They're flinching from this high at around the 67.32 area, but it is starting to give us a bracketable type of range. The cloud getting a little bit more bullish here, so I think I might be more in favor of a possible buy. And I'm going to get ready for this. So I don't have the cloud cross signal yet. Like I said, this would be an early cloud crossover. But I'm anticipating that the cloud may try to cross here. Or, like I said, we could do an OCO style order where we could buy above here, we could short below here, there we go. Yeah, you bet, Steve. Steve says, please wake me up when something happens. I know, it's that kind of day today. Friday. I know a few traders who don't even bother trading Fridays because this is the type of action you get. Very limited, very subdued. I could even tighten my little OCO a little bit, maybe take it a little bit closer toward these lows here. Russell says we got a possible rule of 3 on the Eagle. Yeah, we do. A very slight test of the extreme here. But you're right. We've got a couple of signals printing against the trading band. Here's going to be signal number 3. So things starting to get a little bit more bullish. David asks, what does the break-even bar refer to next to the OCO? This is my break-even button. I can force a trade to break even. So what I'm going to do is I'm going to delete my auto break even. And if the market, what I'll do is I'll hold my stops here for a moment. So if the market progresses, gets a little bit higher, I will show you what the break even button will do. All right, so we've got some resistance here at 67.35. After that, up to the primary support, 67.56.57. That would be a huge move. That's going to bring us back near the highs of the morning. Yes, I thought so, 67.66. Okay, let's just get up here a little bit and then I'll demonstrate the break even. What is going to happen David, is that when I click this button, it's going to go to break even plus 1 tick, but I can protect more. I can, say I want to protect 10 ticks, or you can even do a negative break even. If you want to be break even minus 3 or 4 ticks, say you don't want to crowd the trade too much, but by default, it's usually break even plus 1. Come on, just give me one more little swing here. All right, so watch what happens. My stop is down here. I'm going to click break even, and now my stop is break even plus 1 tick. So it just allows you to force the trade to break even quickly. Very handy feature. Oh, come on, don't tag me out just yet. Darn it. All right, well, I guess they're not quite ready to rally just yet. Now that the clouds are fully crossed, it looks like the next push up will produce a #1 signal. But the overall trend still down, so we don't want to get too crazy on the buy side just yet. Possible late filter entry signal brewing here in the Falcon. And good call on that rule of 3 signal, Russell. So far that's making nice progress as well. And so here now we have the completed #1 signal on the Raptor. Essentially the same kind of trade as what we had before. David asks, so you don't need an automatic break even, the auto break even? No, you can turn this off in your trade manager. You can set the auto break even to false and it will not appear. I kind of like it. I think it's a handy feature. But yeah, if you want to control your break even manually, you can do that as well. David's also asking, how do you determine the overall trend is down? Well, I'm just kind of taking the whole day into account, David. So from the open, we're up here, and now we're down here. So whenever, and I don't mean this to sound facetious, but if you look at your chart and it starts in the top left, goes to the bottom right, you have a downtrend. And if it starts in the bottom left, goes to the top right, you have an uptrend. And if you have more than 2 of these on any chart, you have no trend. So that's kind of the Eric's rule for trend determination. See, at this point, it's hard to tell whether this is actually a change in trend or if it's merely a great big bear flag. Right? We don't know that yet. So when your trade is moving along like this, if you think you've had enough, you can force your trade to break even and breathe a little easier. Obviously, you can roll your trade up manually as well. Yeah, there they go. Give me that little hiccup again. Death by 1,000 paper cuts. Well, the broker will be happy. He's doing okay. And I guess we've had a fairly decent retracement here on the morning. I'm not much for fib levels, but just for the heck of it. So it looks like we open right about here. The low of the morning right about there. Yeah, look at that. We're sitting at around a 50% retrace. So the fib traders are going to get all excited now. They're going to pull out their little fib calculators and try to figure out where the market's going to go from here. So when you have a market that's like this, how I just showed you how this may just be a large bear flag that's forming. The interesting thing is that if we produce a number 2 signal now, is that counter trend or is that with trend? This sell signal that's forming, it's a discretionary sell signal, but is that counter trend? Well, it's counter to the last 20 minutes of trend. Yeah, I'm with you here, David. David says I've never found the fib retracements to be very useful, but the fib extensions are often very accurate. I can't say I have much experience with the extensions, but yeah, fib levels I've often wondered, do they work because they work, or do they work because so many traders use them? Yeah, David says that will forever remain a mystery. Just added to the mystery pile. Goodness knows there's a few of those in the world of trading. Okay, another hard edge bounce. That's the number 3 signal. The Hawk's just a mess right now. We got yellow bars. We've got our trend lines out of sync. The Falcon also a little conflicted. The Eagle is still bullish, but it's below the ATR line, so it could be struggling. Well, back toward this last swing high. Oh, sorry about that. Thanks, Russell. Yeah, sitting on the mute button. I don't. I'll just repeat what was going on here, but it looks like we've got a test of the extreme. Now we're getting a number 2 signal after a number 3. So that's a little bit more reliable. You can also shoot a trend line across your lows and enter below there, if that makes you feel a little bit better. A little trend line break to confirm that the market may be poised to head lower. And they're just hovering. Did they slip? No, no slip. Good. And a quick little move now. This actually has the potential to move back toward the low of the morning if you want to try to stretch this out some. In fact, I think what I'll do is I'll get my break even out of the way. Because I've been getting spanked to break even a couple of times now. And hooray for me. Oh, well, David says, I found Keltner channels to be very useful in knowing when to enter and exit trades. And that's the nice thing about the DTS system and the Raptor is that it's flexible enough that you can incorporate other things like that. For instance, Mike Filigera, who likes to trade the stock market with the DTS tools, he's a big fan of fast stochastics. Only guy I know to use fast stochastics. So he'll have his fast stochastics on his DTS chart. Uh-oh, did I break something? So he'll have fast stochastics on his DTS chart, and he trades with it, and he finds it helpful, and that really is the key. If you find the stochastic helpful, or Bollinger Bands, or Keltner channels, or RSI, or whatever, then by all means, go ahead and use it. However, if your goal is to filter out every losing trade by adding another layer of indicators, another layer of oscillators, another layer of moving averages, or something else to watch, don't do it. If it doesn't help you make a decision, get rid of it, because you don't need it. Trading is not about eliminating every losing trade. Trading is not about losing money. Did that come out right? You have to, trading obviously is about making money. And when you're going to make money, you're also going to lose money on occasion. It's just goes part and parcel with the business. If you were a retailer, your Walmart, right? Your Sam Walton, did everything you buy fly off the shelves? No. You bought some real stinkers over the years, stuff that you had to discount and sell at a sale, or give to a liquidation firm to get rid of for you, or whatever. Not every trade is going to be a winner. But we try to skew things in our favor by limiting our exposure in the marketplace, by capitalizing on a trade correctly so we don't risk more than we can afford to lose, that we try to maximize our earnings when the trade does work out. And like I said, we don't get involved too often. We don't chase signals around. All these things will add up to put you on the right side of the trading equation. This morning, for instance, right? I took that stinker early on, which seems to be my modus operandi of late. But here is the summary on the day so far, and okay, I'm up $160. Not bad. If I had avoided that $200 loser out of the gate, I'd be up $360. But the point is, okay, I took a losing trade. It happens. It's trading. Don't let it ruffle your feathers. You know, you got to try to figure out, okay, what did I do wrong? And that's really the big thing in a losing trade. This cost you money. Education is expensive. Learn something from it. What did I do wrong with that trade? And then put a great big star beside it in your trading journal, what you learned. Did you trade against the trend? Did you get in too early? Were your stops too tight? I can almost guarantee you that a lot of times your stop loss order is too tight. Did you trade because you were bored? Did you trade because the market moved really fast and you thought you were going to miss out of a move? That's another one that's going to get you into trouble. What do they call it now? FOMO? Fear of missing out? That's cost me a few dollars to learn that one, I can tell you that. So, you know, these things you will learn by doing. You will learn by recording them in your journal. And if it works, great, keep it. Like I said, Mike Filigera, fast stochastics work for him. So go ahead, put it on your chart. But don't think that having fast stochastics on your chart is all of a sudden going to make you a profitable trader. If you overtrade, if you jump the gun, if you strangle your trades, you can have fast stochastics and slow stochastics and you will still lose money. Nice little follow through on that move lower. Makes me wish I had held on a little bit longer. Back now toward the lows of the morning and the familiar support zone at 67. Well, it's essentially 67.15, technically 67.14 and 3/4, but it seems like we're kind of stuck now. Yep, see you next week, David. I think, folks, we're going to button up shop here in a moment as well. We're kind of getting into that lunch hour period. It looks like the market's making a decent move lower. I've actually got to head into the city this morning, so I think we're going to call it a day. And if you are going to continue to trade this afternoon, I think sideways is what's going to be going on here. I think you're going to see a market that keeps drifting, and I can see a possible reaction now that we've broken through this low right here. I can see a pushback being very likely. But the trend, like I said, the trend is still down. It seems fairly obvious the sellers still have this market under control. And therefore, you're going to want to favor the short side. So when in doubt today, I think you're going to be better off selling. Have yourselves a wonderful weekend, and I will see you on Monday. We'll talk to you then. Bye for now.